Hi, I'm Hannah Bernard. You're watching Market 1 Minute, and I'm here today with David Cates of Denison Mines. Now, I want to ask you, there's been some recent discoveries in the Athabasca Basin where you guys are located in uranium. Now, what differentiates you from your peers?
You know, Hannah, there have been a lot of discoveries in recent history in the basin, and they're actually all great news for the basin. I want to put that out there first. Anything that brings attention to the Athabasca Basin for investors is good for us. We really believe strongly in Saskatchewan as a mining jurisdiction, and we want to be the next miner in Saskatchewan. But from our story, I think it's that we're a little bit more complete than a lot of the other companies in the basin. So you're not just looking at a flagship asset. We have that with our Wheeler River project, but there's much more to us. We have a strategic interest in the uranium mill, so 22.5% interest in the McClean Lake Uranium Mill, and that's generating cash flow for us. So it's toll milling all the ore from Cigar Lake right now, and that's going to generate about $6 million for a number of years to Denison's account. We're also generating cash flow from a management agreement with Uranium Participation Corp. So that trades on the TSX under the symbol U. And we're also generating cash flow from a third source, which is our environmental services business. So what does all that mean? It means that we're not reliant on equity markets. We're not having to dilute our shareholders to fund the business. And very few people can say that in this space. And I think the last thing that really differentiates us is that we're not a single project company. We're a diversified company with multiple assets in the Athabasca Basin. So advanced projects like McClean and Midwest, as well as a vast portfolio. So about 390,000 hectares of exploration space with Denison properties in the basin.
Let's talk about one of those projects, the Wheeler River project. You just had an increase of resources there. So talk to me about what that means for you guys and what the next steps are.
Sure, we're very proud of Wheeler River. We did recently update our resource estimate for Wheeler River in the fall of 2015, and it was a significant increase in the resource base there. Wheeler is a story of two deposits. We've got the Phoenix deposit, which is the world's highest grade undeveloped deposit, 70 million pounds, over 19% grade. And what we've done is add a second deposit now called the Griffin deposit. It's 3 kilometers away to the northwest, and it's another 43 million pounds at a grade of 2.3%. So now we've put together a project that's quite large and quite high grade. What are we doing next? Well, we think those are the ingredients that are necessary to get Wheeler River to the next stage. And so we're working on a PEA. And that PEA is expected in the first half of 2016. But at the same time, we're still going to explore because we keep hitting mineralization on the property. So we'll explore in 2016 around Griffin, around the K-North trend just to the south. So it's a very exciting year ahead.
Can you speak a little bit to developing a uranium project in Canada as a country? What makes it economic? Is it size, grade? What is it?
Yeah, that's a great question. I think it's misunderstood what's required. Look, size, grade, they're very important in every project, right? You're always going to look at size and grade. Take Wheeler, for example. We have both of those, largest and the highest grade in the Athabasca Basin. But it's more than that, right? You have to think open pit, underground. And right now, all of the operating mines in the basin are underground. You can open pit, and there have been successful open pits in the past. But the thing is that the Athabasca Basin is covered in lakes, right? So if you're open pitting, you're dealing with a lake most likely. And if you're trying to mine where there's a lake, you're having to deal with dewatering the lake, creating a dam, and all of those require environmental permits and cost increases because you're treating that water or you're building that dam. And so it could go either way. You could be underground, you could be open pit, but people have to really appreciate the trade-offs there. I think the other thing that is really key to developing a project in the Athabasca region is infrastructure. So in the east, you've got a whole district of uranium mines and mills. Wheeler, as an example again, has a provincial power line and a provincial highway running through the property. It's between the MacArthur mine and the Key Lake Mill. It's 100 kilometers approximately from the McClean Mill. This infrastructure has a significant bearing when you look at the economics of building a project. Is there a mill? Do you need to build a mill? Do you have capacity at a mill? All of those things come into play.
Now, you're one of the foremost experts in uranium, so talk a little bit about the market for investors that are looking to invest in uranium.
Well, the uranium market's been somewhat muted. Prices have been generally flat, and I think it's coming out of sort of a hangover from the Fukushima nuclear disaster and the whole sense of where the future is for nuclear energy in Japan. But the reality is that nuclear energy is being adopted around the world, and the real story is China and India. These are countries that are adopting nuclear energy at a remarkable rate, and they're not doing it because they see vast global growth. They're doing it simply to clean their air. So we're not relying on the global growth story that the other commodities often do. We're simply relying on people being able to breathe clean air in Beijing, right? And that's really where the future is headed. We will not be able to keep up with the demand. Production from existing mines and even the future mines will not keep up. So we could see a supply shortage as early as 2020, and that would be a real wake-up call to the price.
David, lastly, what has you the most excited for 2016 with Denison Mines?
Well, we're obviously excited about Wheeler and the PEA, but I think what's exciting about the PEA at Wheeler is the potential around putting together a project that could make money at today's price. So we believe the price is rising, but we don't think we're going to need it to rise to make money on this project. And that's important right now, because if we can actually raise the money from the banks and from investors based on the fact that today's price is good enough, imagine we can then build the project, and when the price does rise because of that supply shortage, we'll be closer to selling into that market. And that could be very powerful for our shareholders.
Lots of exciting stuff. Thanks so much for being here, David.
Thanks for having me.